By continuing to access this site, its content, or establishing any contact with Elliott Wave Live, you acknowledge having read and understand all disclaimers and risk disclosures. Hi, Mike Sinibaldi here with another training video. Recently, I was reviewing some charts of markets that I don't actively trade, and I stumbled across the chart of silver. By definition, silver-tongued is having or exhibiting the power of fluent and persuasive speech. The monthly, weekly, and daily chart levels of silver are eloquent indeed. I'm going to show you how I'm approaching this market and possibly scaling into a 500 share position. At the monthly chart level, Elliotticians may label this chart as follows. In a leading diagonal, 1, 2, 3, 4, 5, or 1, 2, 3, expanded flat 4, and then working wave 5 down to complete wave 1 of the leading diagonal. Regardless of how one might label this chart, the takeaway is key support lies just below this market at 2411. Yet at the weekly chart level, we can see that I've labeled the chart in an entirely different manner. Whereas we have an initial three-way decline, wave A, B, C, to complete wave A circle, followed by an expanded flat wave B circle, and then what appears to be a 5-wave decline, which may terminate wave C at 2347. As you can see, I've labeled an alternative wave A, B, and C, which would produce a slightly lower target for a wave C circle. You'll also note under the current interpretation, wave C circle equals wave A circle at 2347. However, you'll also notice that while price broke the channel line, I'm unclear as to whether this is the actual best interpretation at the present time. Regardless, as long as 29.79 holds and price remains below this, the pressure will remain to the downside. At the daily chart level, one can really start to see the symmetry in this market. From the initial three-wave decline, we have waves A, B, C, in which wave C parentheses is equal to wave A parentheses. Next, the expanded flat wave B circle, where wave A, B, C, where wave C parentheses equals a 1.382 multiple of wave A at 37.88, and within the 5-wave advance for wave C, 1, 2, 3, where wave 3 equals a 1.618 multiple of wave 1, the most common Fibonacci relationship of third waves at 33.87, and wave 5 equals a 0.618 ratio of waves 1 through 3 at 3763. Finally, you'll notice the subdivisions for wave C circle are on a lesser slope than the initial sharp decline. That's exactly what you want to see in a corrective structure. You'll also note that I've changed the wave labeling at the daily chart level to reflect the fact that I was unclear as to whether the weekly chart level interpretation was indeed correct. As you'll see here by my cursor, I now have this labeled as wave 3 red instead of wave 3 parentheses blue. And where wave 3 parentheses ended just below wave B parentheses. So for all intents and purposes, we now know that the downside is limited and the greater risk is to the upside. However, you'll note that I'm now working or considering the fact that this initial structure here is part of a wave 4 parentheses advance that should terminate somewhere around 2979 and then fall in 5 waves to complete the pattern. Also note that there's a level of support here that's created from the following. We've already identified we have wave A, B, C terminates at 2347. I've identified this as a 1.618 extension at 2351, and from here to wave 3 red, wave 4 extends at a multiple of 0.618 to 2336. In conclusion, these levels give me an appropriate spot to look for a turn in this market. I hope you found this video helpful, and best of trading.